Hello trader, so today we are going to be checking on how CPI actually affects the market, and this is going to be very amazing because this is actually the fundamental class. And the reason I'm talking about the CPI, the reason we are going to start with the CPI is the reason being today we are expecting news to come over here, and the news that we have on our calendar right over here is that on 6 that is at 4:30 p.m. actually you can see the CPI monthly. CPI is estimated to be released over here, and the CPI yearly and all these are just going to be expected to be released in the USA. As you just know, the reason we are interested in USD dollar is the reason that this actually is the measure of money, commodities, stocks and all that, and actually this USD, you have to know that. So starting over here, let's go to the direct to the our questions over here. CPI. So you may be asking yourself what the word CPI means. Let's just start from there so that we also do some history to know how the CPI actually has been affecting the market in previous days. So the word CPI actually represents the word name, which is a consumer price index. This is a consumer price index. Consumer price index. Consumer price index. So actually, okay, this name is actually come from most of people, those you don't know, it's just also known as inflation. So this is the inflation measure. So it's just the inflation measure. So that is what we call the CPI. And actually, if you just want to know, for example, let's say the reason actually you see, like in my country over here, this time maybe we could purchase maybe a bread at 50 bob, okay? But now actually the reason now the brand actually can just be, maybe the brand actually was even going not even 50 bob. Our time actually we were buying the bread sometimes back, we were buying brand at 15 bob, but actually now the brand is just going to at 60 bob. The reason this money has just risen from this value to this value is actually because of CPI, or because of inflation rate. This is inflation. The reason you can buy the same product but with a higher amount of money, that is what we call the inflation. And actually, if you just want to calculate the CPI, where how do you calculate actually the CPI? This is the cost of the product and services in previous. Cost of produce and services previously, that is, we go here, that is down, and cost of produce of product and services now, and divide by previous. So you just collect the data of, maybe let's say I'm just going to be this one to see whether inflation has increased or not. So for example, let's say the brand was going at 50 bob, is going at 100 bob now, but previously the brand was at 50. Then you just multiply this times 100. So we multiply this by 100, we just get this is 2 times 100. You can see this is 200%, which means that the price has gone up by 100%. So it has actually doubled times 2. So actually you can see the inflation here has gone up. So the inflation has gone what? The inflation, and it's gone up. Assume now the price of the bread now is going at 50, but previously the price of bread was going at 100. You multiply by this and you get the price is at 50%. So what has happened is that this inflation has actually reduced so much. And what can just cause this? There are differences that can just cause this. The reason we just see people maybe have this high inflation and all that is because maybe people are overspending, spending a lot and all that. Here people are saving so much, or maybe they don't have money, or maybe the price is high in the market and all that. So why are we interested in CPI in the USD? This is what happens when actually the data, when we expect maybe the CPI to increase, maybe let's say increase, when we expect the price to increase, what the government will just do is that, for example, assume in this case here we have very high this one, and we saying people are spending so much. What government will just do right over here actually to make sure that people don't spend a lot is that they are going to increase interest rate. Okay, so that is actually what happens when the government actually realizes that people are spending so much money, and what they actually do is just to increase the interest rate so that they can just encourage the people and the consumers to that is to save and all that. And let's see over here. So what will happen over here, people will now start saving money, that is ensures cool down spending. Okay, they just have to cool down the spending. Now what happened if the interest rate actually is very small, maybe they're very small? What government will just do over here is to reduce interest rate, to reduce the interest rate so that it can encourage people to spend. Okay, they will just encourage people to spend money. Yeah, so that's what you have to know. Let me just brief this. CPI, increase in CPI will increase that is increase in CPI will just make the government increase the interest rate. At the moment actually the government increases the interest rate, will just make that the people or now have to save the money so that the economy can just be good. Let me just go over here so that we can just be checking something right over here, and I'm going to the calendar so that we can just be checking on this. And when we actually click the CPI over here, let me just click the one over here, the yearly one here, so that we can see what will happen right over here. And actually you can see the usual effect is that action greater than forecast is good for a currency. So when CPI actually increases, you expect that things are going to be good right over here, and that's why we expect things to be very nice. So for the currency, so we are going to assume something over here. I'm going for the monthly one, the first one here, to know what the money will just be doing. So maybe you can just take the action when you see the CPI, and maybe you can just wait maybe for the 1 week. You can enjoy a good profit out of that. I will see you in the next one. I hope this was simple. That is CPI, that is introduction to the fundamental analysis, how they affect the market to know the future. Subscribe to the channel if you just want. You can use if you you are searching for a gold broker that you can just use with the instant withdrawals and instant deposit. You can use the FX Pesa. It's download over there free of charge, and when you just register using that link, you can just WhatsApp me so that I can just add you to my team. You start enjoying free classes. I will see you in the next one. Bye bye.